The dollar index weekly chart, I mentioned this imbalance here from this candle's low at 110.426 to this candle's high at 107.274, and then the buy side, which would be residing right above there. I'm not of the opinion that we're done yet. So I mentioned that we would likely see it drop to the very minimum of this candle's high. So that's what this level is here. So when we get down to lower time frames, you'll see that this is that level here. So I'm going to just make it a little bit more broader so it kind of like pops on the chart. So the buy side was the initial draw. We got that last week. And in this week here, we drew up into that. The low-hanging fruit objective, once we cleared this buy side, okay, was this level right here. I mentioned this in context. I said that because I don't know where we're going to open up for the week, which was here on Sunday's opening. I have to make concession that because we're going into non-farm payroll, which is this week, okay, that week, and I've taught this ad nauseum through Twitter Spaces, my long-term private mentorship students are aware that we are under a protocol that I've taught them, and it is basically try to make your money. And this is for the folks that like to say I teach not to trade on Mondays. That's not true. Every non-farm payroll week, okay, that means the economic number that comes out for non-farm payroll numbers or employment data that comes out typically, but not always, the first Friday of every month. That week tends to be a little bit problematic for symmetry, meaning that after Wednesday, it tends to be a little bit more difficult to have a one-sidedness to the marketplace. So because we go into that new week with an unknown where the opening price is going to be at, it goes without saying that obviously between where we were on the daily chart, and we're dropping down into the daily, the old high we were aiming for 2 weeks ago, 3 weeks ago, 4 weeks ago, 5 weeks ago, always from back here, we got that, and then it created a fair value gap in here. And I mentioned that, and I mentioned the wick in here, consequent encroachment from that wick, which it traded to beautifully, and then reacted off of that. And what I like to do is I have a idea technically, which is what I outlined last week. Okay, so for the Tom, Dick, and Harrys that want to go into my comment section or tweet to me and say, "But you said this and you said that," go back and listen, because I said I don't believe we're done going up in dollar. We could consolidate around here, but ultimately we're not done. We're going up, and we're going to trade into the low of that weekly imbalance, which is shaded in pink, specifically aiming for that 107.274 level, which is the low of that imbalance on the weekly chart. And that's what we got here on Tuesday, rather. Okay. So the bias was bullish. We have seen that climb down here. All this run up here is all interest rate driven. It also inspires risk off. That's going to pressure foreign currencies lower. Now, that is what I told you that we would expect to see the allowance for further declines in the indice market. That means the S&P 500, the NASDAQ 100, the Dow Jones, and individual stocks. Now, if we were to see the opening prices drop down to an hourly chart, the imbalance here on the daily chart, that fair value gap, let me go back up to it real quick to show you what it was. That's the separation here. I told you about that. Okay, we drop down into that. And the midpoint of this candle's wick. Okay, it's consequent encroachment. Let me show you. Here is the midpoint. And there's my fib levels you guys like to ask me for all the time. Take a screenshot of that. All right, here's consequent encroachment in the fair value gap. It dropped down into it, hit it, went a little bit past it, which is the mohawk. That means it's permissible. We allow for that. The market come back up here, and then on Monday, where did we open? In relationship to how we closed on Friday. Relatively unchanged, right? So was there any major gap risk noted at the opening on Sunday? I'm sorry, on Sunday going into Monday's trading? No. So was there any kind of shock and awe that was placed in the marketplace when we started trading? No. So what was the premise that I left you with on Friday of last week? That we would eventually trade up to here. Using the information that's down here, this was your discount. It's not done going up higher. It's going to keep going higher. But because we're going into non-farm payroll, look at your economic calendar. You should be aware of your economic calendar every single week before you start trading that week, and every single day before you even open your charts up. You should be referring to your economic calendar. But because we're going into non-farm payroll, I was telling you that we could chop around in here, and between Monday and Wednesday morning session, that setup where you want to be trading that non-farm payroll week, your setups are best traded on Monday, Tuesday, and up to Wednesday morning session. So come 11 o'clock in the morning, New York local time, on Wednesday, it's time for you to close up shop if you're brand new. Bullishness is what we were expecting. If we would have saw the open here, okay, say the dollar index opened below this wick or tail, well, that would need to be immediately erased and move higher. Did we open down there? No. What happens if we would have gapped up and opened? Then I would have looked for it to trade down into this candle's high and or the body, which is the close. And then I would expect it to show some willingness to respect that. And then I would look for lower time frame charts to start building some kind of structure that would be bullish. Every down close candle supporting price, up close candles being broken to the upside, stop hunts on the downside that are showing immediate, displacement to the upside after sell side's been taken on the lower time frames. If I start seeing those things, if we had an opening gap higher, that's the protocol that I work with. So Mondays, if you haven't already wrote it down, Mondays of non-farm payroll weeks are always a trading day. It is absolutely a trading day. Now, apart from non-farm payroll, Monday can be a day where I'm willing to not do it. Unless it's so obvious, I'm willing to sit on my hands and let them have Monday. Because Monday is going to be an accumulation day. Farm payroll, if it's a non-farm payroll week, in other words, I'm willing to let them have Monday without me. Or I'll trade the Monday afternoon session where everything's a little bit more clear. But that was the rules I've always stated. Okay. So anyway, Monday, look at the big range here. We had that really nice run here. And then on Tuesday, we slid into our target. Now, in my mind, as Inner Circle Trader, ICT himself in the flesh, what am I thinking for the rest of the week? Well, I would like to see this down close candle here. I would like to see the mean threshold, which is the midpoint of that. I would like to see that keep price from closing below it. So on this time frame here on the daily chart, I would very much like to see no close below that midpoint of this down close candle. So in specific terms, I don't want to see a close below 106.388. Okay. Can it trade down here and touch that level and go just below it by a little bit? Yes. Would it change anything if it did that? No. If it closes below that, it just means that it's problematic for this week, not next week, not the week after that, not come Thanksgiving in the States. It just means that it's indicating that it's problematic that we'll make a higher high for the week by the end of this particular week or on the heels of non-farm payroll numbers. That's all I'm stating when I say that. It just means that if we close below this, then it's likely that we've made the high of the week. That doesn't mean go short. Now we can drop down to the hourly chart. And here's the market trading down into that inefficiency. It trades just a little bit, that's fine. And we run up into this down close candle here. Be mindful that if we were to spike down through that daily bullish order block that I was telling you that I don't want to see it close below, if it were to spike down below the midpoint of it, just have this level here, highlighted because it could touch this one. Okay, so it could touch that and then resume higher. So this one here, that's that level on the hourly chart. So, okay, it can spike through it. How far can it go and it not really upset me? This level here, that doesn't look like it's anchored to anything, right? But when we drop down into the hourly chart, it pops off rather clearly. Here's your order block right there. And it has a fair value gap, which makes it very, very strong and likely to be a measure of potential reclaimed discount, go long, smart money accumulation, that type of thing. Okay. But it's non-farm payroll. Okay. So anyway, let's go over to the euro dollar. All right. So here's euro on a daily chart. All right. And we were talking about how euro was going to be heavy, and because of the dollar bullishness, we were going to look for lower prices on euro. Originally, I took your eye to this here, and then down here. And then if we got below here and it was animated, we would trade to low here, and then ideally trading below that low. I told you this fair value gap here, it would likely trade up into that. Last week, we would want to see it trade up into that, and then go lower, attack the sell side below this low right there. And that's exactly what you got here on your chart. Okay, so for your notes, the imbalance high, which will be framed by this candle's low. The imbalance low, which is on this instance, it's this candle's high. The middle of it, which is consequent encroachment because of the gap, that's the midpoint here. That's this level here. Then it's the upper quadrant and the lower quadrant level. That's always usually invisible, but my eye, I just look at it like I look at this one here, that's going to the upper quadrant. And even though it technically didn't get to it here, it just falls a little bit short of it, and it's proved me right or wrong there. Okay. And down here, I'm highlighting these two levels here, and they'll pop up down here. See how it felt just a little bit short of that? Didn't quite get down to it. But in my mind, that's still good. Okay. And it's reaching for that level, just like it used it here. Okay. So in my mind, if I have an imbalance, if the range is sufficient enough to allow for these types of levels to be even a factor, obviously if you have a fair value gap and it's only like, say, I don't know, 10 pips or 9 pips, I'm not going to look at the quadrant levels because it's too insignificant in terms of a range to be a factor. I would just use the high, the low, and the midpoint of it. Okay. Inefficient in sell side. It's imbalanced by buy side. That means it went up. So to reprice between this candle's low and this candle's high, to be efficiently delivered and allow for symmetrical market delivery, that means this market needs to come down across those two levels, being this candle's low and this candle's high. Once it does that, that is not a balanced price range. That is not a. We traded up into this level here, which was given to you beforehand. We traded up into that, and look what it does here. Look real close. This candle's low right here. Okay, that low comes in at 1.0615 even. The high on this candle trades up into 1.0617 and 2 pipettes. So that pound dollar. We'll look at that real quick. Down here, like I mentioned last week, that this is where I believe ultimately we'll go to for the pound. Last week I told you watch this candlestick's tail in the midpoint of it, which is consequent encroachment. It's the midpoint of it because we treat wicks and tails as a gap, and you can see it trades right there. On Friday, trades right up into it, goes a little bit past that. That's permissible. That means the market does what? Trades lower, overtakes the imbalance here, which let me go back up to a weekly chart because that's what it's anchored on. That's this candle's high right here on March 2023, March 6th rather, and then this candle's low, March 20th, the week of, and of this year 2023. So that one single candle up here, that's a fair value gap in the form of a buy side imbalance, sell side inefficiency. That's what's being highlighted here. So when we have that on the weekly chart and we drop down a lower time frame daily, that was the draw. And now this should act as a inversion fair value gap. That's how I would like to use the information that it's given me. So trading above it a little bit today, that's fine. But I want to see, does it want to go lower and then use the low of it, or consequent, of course, midpoint of it, if the dollar continues to go higher. Now, because it's non-farm payroll Friday, my willingness to let that trade go, if it were to set up and go lower this week, it's fine. As long as it doesn't trade below this low here, next week I would start looking for shorts to get to that run, to that low. And I would miss any move that starts on Thursday or Friday non-farm payroll. And I'm willing to let that go. And I'm going to quickly get through the rest of this because my battery is about to die, and I don't want to plug it in because it will make it even longer than I already had. So here's the daily chart for E-mini S&P. I told you we would reach for this low down here, which is also part of this inefficiency. We dug down into that, and that target's been met as well. So should everything remain the same and remain everything equal, then I would expect price to want to gravitate down to this low here. And eventually, if we were to accelerate, say something happens kinetically between countries as we get into the holiday season, we could see it trading below these lows here. And yes, that's a significant move, but that's not a lot in terms of what would be expected if there's something kinetic breaking out between different nations and ours. Okay, so worst case scenario, down here before New Year's. Okay, 60-minute chart. This is the opening gap for the week where we closed on Friday, where we opened this week. We went lower, came back up in lower quadrant to that level, broke lower, sell side imbalance, buy side efficiency with a breaker. That right there is a unicorn setup. Folks, that is one of the wonderful setups that just repeat over and over and over again. It's there every single week, multiple times on many different time frames. But this setup alone is a model in and of itself. It's beautiful. What would you aim for? That low right there, and it hits it right there. Beautiful. That's it. You're done. Wrap. Go do something else at your time. I got to jump to NASDAQ because I know if I don't, the battery will die. But ICT, this is not professional. You should be doing longer videos. You should have made preparation. You should be thankful. All right, so we had market trade down into the inefficiency and below these lows, as I mentioned. This one here, rather, in relationship and contrast to the E-mini S&P. NASDAQ's being a little bit more reluctant to go lower. Okay, so I mentioned this last week. It's a high resistance type thing getting through these consolidations, and sometimes you have to let it come back against you a little bit, and it's even worse when it's a non-farm payroll week. It's very, very hard to do that. Okay, and again, it's another reason why I'm not trying to hold overnight or for the weekly range. Like I'm usually in Forex for a long time, I've taught you and I showed examples of where I'm one shot, one kill, where I'm multiple days trading the weekly range. I'm not trying to trade that model because of the risk that's in the marketplace today. And it's been like that for a while, since 2020. So I'm content with being an intraday trader, getting in, getting out, and being comfortable with that. So last week I said we would trade up into this area here, but I wanted to see the upper portion stay open. We got that. We collapsed here on Tuesday, and Wednesday we dropped again below the lows here. Came back a little bit more than I would like to personally have seen for NASDAQ. I would like to see it lose a little bit more ground there. On the 60-minute chart, I don't want to take these annotations off because I want my son to see them, and he hasn't had a chance to see it yet. So I'm going to have to work around it. I apologize. Nothing in here except for the equilibrium of this range between the high and the low, midpoint of that, right in here. See that? And then they have the gap of this week where we closed on Friday, where we opened up. We basically traded back up into that gap. Two things there: the opening gap of the week, and then the equilibrium price point between this low and that high. I want to see it get heavy in here and start to rotate lower. That's what I'd like to see. But because it's non-farm payroll week, if it doesn't do so, it's going to skin off my back. I could care less. And I'm not going to risk any money or lose or hope to profit anything. So it liberates me as an analyst and not expect or be right about anything. And watch this high here. We could punch that tonight and then maybe work its way down into this area here post non-farm payroll Friday. Okay, so there you go. Run this high, or consequent encroachment of that wick. But definitely take this high here and then maybe reject that and then come back down in here come non-farm payroll Friday morning to 11 o'clock in the morning in that area, time-wise. And then a 5-minute chart, the inefficiency right in here with the order block. Traded down into that, dug into it, and rallied up. All these details here, I gave this markup and took the live trade on NASDAQ. Called the level out 14,864 even, which was 2 ticks below the actual level, which is the old high I showed on the recording. If you watched on Twitter, to this very candle high. All these notes here on a 1-minute chart still aren't lined up. Told you it's about to die. On a 30-second chart, I traded all this in here, and it came back on my stop, and then I went right back in again, and it ran right to my objective. So if you want to watch that, it's on Twitter. I can't post be careful tomorrow. Non-farm payroll Friday week on Thursday and Fridays are problematic. And until I talk to you sometime, probably on Twitter. I don't know if it'll be tomorrow, if it'll be in the afternoon, but I'm sure I'll be tickling your Twitter there. I'll probably call something out on non-farm payroll live on Twitter, but not to inspire you to take a live trade. Until I talk to you then, though, be safe.